Hey, what's up, guys? Houston here. If you're considering getting a Sofi loan, okay, I know a lot of people talk about them. I know a lot of people consider getting them. However, some people are not telling you what actually is going on with Sofi, and I'm gonna actually give you some better alternatives. But let's break down what Sofi loan is, okay? So we all know that it's a personal loan, a debt consolidation loan. However, one of the things that people do not know is when it reports on your credit report, it reports on your credit report as a CFA. That's a consumer finance account. Okay, now why this matters? The reason is when you have consumer finance accounts reporting on your credit file, this affects your FICO 8 score. Okay, your FICO scores. Now, what I mean by affecting your FICO 8 score, even when you pay it off, like that loan, because it's a consumer finance account, it reports different, okay? And so like your FICO 8 score usually is going to fluctuate a few points. Even if you pay it off, it's going to fluctuate lower because you have that on there. All right, so that's one of the reasons. Now, in terms of this Sofi loan, it is a good loan for debt consolidation. One of the reasons that a lot of people run to it is because they may take into consideration other than your credit score sometimes. All right, so like how long you've been on your job, how long you've been at your place of residence. Okay, so they may calculate that in sometime. Now, the average credit score to get a Sofi loan is usually about a 670, and they usually use Experian FICO 9. Now, this is a cheat code here, and the reason is because I always tell you guys, if you find an institution that's using a FICO 9 scoring, to always make sure that you add on your utilities to your credit report. You can add on your rental payments, authorized users. You can add those on, and that would help influence your credit score, and they won't count that against you. That's the reason why a lot of people like them. Now, they go from 5,000 up to 100,000, all right? Now, here's the thing about it. Looking at their debt to income ratio, unfortunately, like with them, because they're like other regular banks and stuff, your DTI with Sofi is going to be at least up to 60%. All right, if you go beyond that 60%, then that may not qualify you. Okay, and so some people are not even aware of this. Now, one of the things I always tell you guys in terms of what they're actually looking for this type of loan, your credit file has to be at least 3 years old. So that's the reason, like I tell you, like adding on authorized users and rental payments, because that's going to actually help age your credit file. Even with my Identity IQ, they have this with Identity IQ, they actually have a program where they can add on your utilities, and they can backdate it so your utilities can help age your credit file as well. Now, again, going back to Sofi, it's 3 years. It's 3 years, and you have to have at least 2 accounts on the file. All right. Now, here's what I would do. If I'm actually working with a 670, this is what I'm going to do. If I need a personal loan, then I would probably go to a credit union. And some of the credit unions I would look at is probably like Johns Hopkins Credit Union. And the reason is because with their personal loans, they give you 90 days before you make your first payment. With Sofi, soon as you get that loan, you have 30 days to make your first payment. And again, remember, it's going to report as a consumer finance account instead of a installment loan. So that's the reason why it really makes the difference. All right. Now, you also have, which is my favorite, is State Department Federal Credit Union. Now, why is this so important? Why would I choose this here over Sofi? again, like John Hopkins, all you need is a 640. With SoFi, I told you they need a 670, right? Now, a lower credit score with John Hopkins. With State Department Federal Credit Union, they also take a lower credit score. I'm talking about averaging maybe about a 620 credit score. Now, here's the thing about it with the State Department Federal Credit Union that I like. Not only are they giving you loans up to $100,000, okay? Well, when you take out that loan, they're giving you 90 days to make your first payment, all right? Now, they also offer lines of credit, which SoFi does not offer line of credit. I always tell people, if you can double dip, triple dip. That means that like with a credit union, you can get a loan, a line of credit, maybe a car loan if you choose, or a credit card, okay? So that's the reason why I'm telling you to check out these here institutions versus looking at a SoFi loan. Now, SoFi, a 620 minimum, but also they have credit cards that go up to $100,000. All right. So that's the reason why I'm telling you guys, with some of these here, they're fintech companies. So with some of these here fintech companies, again, because they use different algorithms, they may make it a little more flexible for you to get qualified. However, in terms of better interest rates, I would still say that you probably have a better chance at a credit union. Again, like with these credit unions, I'm telling you, even with DCU, with Digital Federal Credit Union, okay? So with DCU Credit Union, all right? So with DCU, many people are not even aware that if you take out a loan with DCU, they give you 60 days before you make your first payment as well. A lot of people are not even aware of that. And again, you don't have to have a 670 credit score in order to get approved with DCU. So with Digital Credit Union, you don't have to have a 670 State Department. You don't have to have a 670 in Johns Hopkins. So you have other credit unions out there as well that actually will work with you. Again, just even if you're in the low sixes and you're trying to get a personal loan. The reason why these here loans I chose is because they are better to me than a SoFi loan, is because they give you more time before you have to make the payment. So that's the reason why I like these institutions, all right? Now, if you have really bad credit, then you may want to look at a platform like Low Credit Finance. They go up to $50,000. However, they do not do a hard pull on the credit, okay? And this here institution, because it's a platform, they work with tribal lenders, okay? And so since they work with tribal lenders, if you're on benefits and things of that nature, they're still able to work with you. Even like with SoFi, you don't have to have a regular job. So that's the reason, like, you can still be self-employed and get qualified, okay? But you have to have like a registered business in order for that to happen. So that's the reason why I tell people that you don't necessarily have to have a job. Even like if you're on benefits, but I would tell you the minimum income, I'd tell you to be more flexible with SoFi. I would tell you should have a minimum income between $35,000 to $40,000 annual income, all right? That's very important. So a lot of people, when they apply and stuff and they get denied, they're not knowing some of these data points that actually could help them get approved somewhere with another institution, all right? So if this is helpful to you, if you have any other questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.